Welcome back, folks. This is the weekend review for the ICT Mentorship. All right, so this is going to be a brief one, and over the next couple weeks, probably a month, maybe 6 weeks, I'm projecting, we're going to keep our videos really short. And the reason why, I have to break our mentorship up into multiple user groups and make multiple videos because there are some undesirables in here that I'm going to weed out. And it should take me about 6 weeks or so. And I'm also going to be increasing the number of videos. So we will be moving to a daily upload because I'm enticing these goobers to feed their base with my mentorship videos. And the faster I put them up, the faster they'll put them up. And I'll be able to reduce the user group down to where they're at. And then once I find out who they are, I can ban them. And then we can resume on our regular schedule, which is 2 videos per week. So that's your consultation prize for putting up with the additional BS that has to be dealt with. And it's unfortunate there's a lot of people out here that have no character and or just simply refuse to follow the rules. And that's the reason why I'm shutting down the mentorship enrollment. So it's about time. I mean, lots of money with this, and we're going to wind this mentorship down and going into December of 2021, and it'll just be 1 video per week. It'll be a review. So there's going to be a lot of teachings in 2021, but I have to remove the people that are doing what they're doing right now. And greed will prevent them from stopping what they're doing because they're trying to get that money. Well, I'm about to take them out of business and laugh in their face. So here's the dollar index. All right, so Wednesday's midweek review, there was a remark I made. I said that we have the BISI in here, the buy side imbalance, sell side inefficiency. That would be the target. And we were sitting right here on this candle. And I said, be mindful of the volume imbalance that resides in here. It could trade back up into that and then go down and close in the BISI. And that's exactly what IPTA did. So where we're at right now, it looks as if we could potentially return back up into the volume imbalance and completely close that, or come back up into this candle's low. Here, let me get on the candle. You can actually see the low. All right, so the low is 97.95. That level could be revisited this week. Now, I'm not saying what particular day, but it could get back up into that level if we get some kind of turnaround continued in the economy. States are opening up now. Obviously, there's a lot of civil unrest still. Those things are growing, but businesses themselves are slowly coming online again. Many other businesses there closed their doors forever, but nonetheless, we're watching the economic front in the U.S. to see what we're likely to see a continuation of this reopening, or does all of the protests put another damper on things? And it's something that you have to keep your finger on, checking the pulse of it every day in the U.S. I mean, things are ready to pop off everywhere. They're doing these protests in every nation. They're doing that in Mexico now. The enormity of how many people are in the streets right now, it's a little intimidating, actually. I mean, you think about how many people are out in the streets right now. Like, that is amazing. It's amazing. So what they do with it and what they're going to do over the next couple of weeks, that's of great concern for me, because I want to see if we start popping off, if people start shooting at the National Guard, which is what I kind of predicted was going to happen next. Then we go into a different set of rules, and that's when full-blown martial law kicks in. So we'll see. George Soros came out, made a public announcement saying that I'm offended that people on social media are saying that I'm paying for these protesters. Actually, you are, and you're a liar. And the bottom line is people need to get wise and do something about him, because he's a mess. But anyway, I think that the volume imbalance could be revisited this week, and if not, just above that at this candle's low rate there. Otherwise, we're looking for to still try to erode and dig a little bit deeper. We still have this last down close candle. Okay, so let me put this on the chart. And there's so many things I want to talk about, clearly. But I'm going to refrain because the videos will get really long. But this is your bullish order block. So we can see on the downside, we still have a little bit of room. 96.10 could be touched, and maybe go into consequent encroachment in here. On the upside, if we get any kind of turn in intraday volatility this week, again, keep your volume and balance noted on your chart, and then that candle's low right here. So all I'm going to do is just take this line and put it right there. So there's our two bookends. You want to watch and see if price is going to gravitate to either one of those levels. Okay. And just like we did with the YouTube series, okay, all you're going to try to do is determine, is it more likely for price to trade down to this level or up to this level, or the volume imbalance in here? So each day you're going to look and see, does it look like it's turned and want to expand up into here, or does it want to reach down into this level here? And then that's your basis for your bias. Now, that's an oversimplification on my part, but I understand that that is enough to get your gears turning. Go over here to the hourly chart. Okay, here's the hourly chart for the dollar index, and there's a small little gap in here. That was an actual gap. Trade up in consequent encroachment there, and then right back into it again, just slightly higher than consequent encroachment. Again, consequent encroachment is the mid part of any gap. Okay, much in the same way when you see my order block, okay, the midpoint of an order block is the mean threshold, but a gap is not a real range in the sense that we have a traded or any measure of trade in here. It was just a complete gap. The volume imbalance is if we have a wick on both ends that go into an area like this, but no bodies reside in there. Okay, so that's a volume imbalance, and that's what this little pink area is here. It represents that little area on the daily chart before we drop down into hourly chart. And I said that, you know, be mindful it could trade back up in there and then come down and fill in that BISI. And this is what we have here. Beautiful. Man, that is a beautiful reaction. It's almost like I was lucky. But nonetheless, we see we got this a little bit of SIBI in here, sell side imbalance, buy side inefficiency to close back in, last up close candle here. If we go above these short-term equal highs, we can pump them into this bearish order block. This, to me, it's rebalanced. So if it goes above the order block here, then we're probably going to want to seek a little bit more liquidity on the upside. There's a small little area of equal highs here with that old daily low and that daily candle. I remember I drew your attention to here. I moved the line from one old low to now this one. So it's represented by that 97.95 level. So it's a matter of what we're going to reach for next, and give Monday's trading permission to provide that insight to you. So in other words, stick your hands in your pocket, don't trade on Monday, and just see what it wants to do. On the 15-minute time frame, again, really nice run back up into the SIBI here. Distribution, equal lows, we ran through that. All of this in here is sweeping on the low end of that BISI on the daily chart. So this is the low end, or the discount of the BISI on the daily chart, and this is the premium end of the BISI. So we went back up into, after breaking down into it here, we traded back up, filled in some of this SIBI, but notice it's not completely filling in. That's why we don't just say every inefficiency has to be completely refilled. No, it doesn't. It does not need to do that. And in fact, it's better if it doesn't, because then this becomes a breakaway gap, the unfilled area in here. And that, when it happens, it starts to break down. That is a very strong price signature that you're going to see a quick repricing. And since we had our levels in here, the logic behind it was the daily BISI, so it's going to offer downside. In other words, it's going to provide delivery of price on a downswing, because on the daily chart, between this level and this level here, it was offered rather quickly in the form of big candle only in that range. So we extend that out in time, and we transpose those levels onto our lower time frames like we have here with a 15-minute chart. It really builds a lot of context to looking for intraday price swings and how we can use that for short-term trade as well. But you can see clearly a lot of equal highs in here, so they might want to run above that, trade back up into these up close candles, which is that hourly one single candle. So all of this here is that 60-minute bearish order block. Inside of that range, there's really no inefficiency except for this area right here. So we have a bearish order block, and then right in here. So have this on your charts this week. If we get any kind of upside on dollar, it might want to just go right up in here and trade into this right there, that fair value gap. Okay, so it's a sell side imbalance, buy side inefficiency, fair value gap. Okay, so it's a small little gap there. It might want to reach up into that, if not just at the bottom end of that. So if you're going to try to do any kind of practice sessions using this level here on your hourly chart, be mindful that it could trade as far as this area here on a 15-minute time frame, and that obviously has to weigh on your amount of risk for your practice trade. All right. Otherwise, we have equal lows. We took a lower low here, and I like that. So it's going to have to take a whole lot more energy to get down to take that out. And if it does, that's exceedingly bearish. So just remember that. We had relative equal lows. We broke down, and now we're starting to climb up. So it looks, gun to my head, it feels like it wants to reach up first more than go down. Okay, so just bear that in mind. It might just consolidate and allow cable to do a little bit more on the upside, and then euro can tread water and go sideways too, but euro dollar can still pop above its daily high too. So let's take a look at euro dollar. All right, so here's the daily euro dollar chart, and I have a couple things in here I'm going to remove. It's making the chart a little busy, at least it is for me. I'm showing the mean threshold, which is the body's open to close here. The wick does extend up here, but we're only looking at the body of the candle. There's a 50% level. Extend that out in time. That's mean threshold. Okay, so mean threshold is where we traded up to on Friday. So I'll take this off. We don't need that anymore. And I'll scrub over here, and you'll see what this buy side liquidity pool is when we get down lower time frames. But you can see a beautiful trade right back down into this BISI, buy side imbalance, sell side inefficiency. We traded down to that, and then the extrapolated move on the upside on euro dollar on the heels of the breakdown in the dollar. So we did in fact get up into this fair value gap here. We traded to that beautifully, and then it slammed through it. If we have any further upside, in other words, if we trade back above Thursday's high, which comes in at 113.62 and a half, so we'll say 63. So 113.63. If we trade above that, your attention should go to the rejection block in this high and its old high. So that would be 1497. Okay, so 1497 is their next level of interest, and I'm just simply going to just take this line and carry it up to here. All right, so that's the business there. Just an accelerated price move that is beautiful. That is a completely predictable move, and you saw evidences of that in our commentary. So let's go over to our hourly chart. All right, so you can see, as I mentioned, beautiful, just a really easy uptrend. Every imbalance or bullish order block offers an opportunity to reaccumulate longs. And now we had this run up in here. Trading down inside of this BISI, buy side imbalance, sell side inefficiency. Just like I mentioned on the dollar, just in a reverse, we have relative equal lows here. It could spike down into that down close candle, which is our bullish order block. Be aware that it could go to the mean threshold of this down close candle too. So don't get excited thinking it's just trade down to this candle's high or it's open. Be mindful that it could dip a little bit deeper into that, and try not to be too fancy with your entries if you're doing any practice on that one. It's dropped down to a 15-minute time frame, and here's that buy side liquidity as is shown on the daily chart that you would see when we get down to a lower time frame. So here's the 15-minute chart. Relative equal highs. Price does in fact reach up into the mean threshold on that bearish order block on the daily chart. That's what's being shown here. We have a breaker here, high, lowest down close candle that has the most beefier candle or body. Okay, what do I mean by that? All right, you see these in here. This candle's low is 113.26 rather, and this candle's low here is 113.26 as well. These little candles body versus this one here, which one does my eye go to? It goes to this one here. So all you do is just take that out in time, extend it out in time, and make sure it gets on the low. All right, and once we break down through it and we trade back up into it, this level is your breaker. All right, here's your breaker. The down close candles here that comprises the order block that makes the bearish breaker. We have these two candles here, but it's the beefier bodied candle my eye goes to. So if they're relative in terms of like this low and this low, it's only different by, I think, a half of a pip or a pipette. What is it? Yeah, this is 62. I think this is 63. Yeah, 26.3, and then this is 26.2. So while this went down 1 pipette's lower, I want to focus my attention where the clear, easy, obvious bodies of the candles represent more of the volume. And we trade down through it here and then trade back up into it. Beautiful respect of the breaker. Look at the bodies. Yes, we get a little overzealous move here, but all the bodies of the candles are inside of that breaker that takes out the buy side liquidity above here. So think about it in terms of like retail. Retail saw up, and then started to break down, and they're thinking, okay, this is resistance. Well, they're going to short and put their stop loss right above that, and that's what they cleaned up and traded to the mean threshold of the daily bearish order block on the Eurodollar. We break down, create the breaker, displacement, rebalance, and now we have all of this sell side liquidity building up and the order block down here. So just be mindful that we could trade. Yeah, I like this candle's high here. Let me look at that. I like this right there. Well, if I can get it to pop up. There. So 1250 mid figure. Watch that level. You'll get, maybe you get a reaction there. If it trades through that, we have relative equal lows here and a lot of sell side liquidity that could be attacked if we get a quick surge on the upside on the dollar index, which is still on the table. We'll have to see how Monday's action is there. All right, so finally, let's go over to the British pound. All right, so here's the British pound daily chart, and we were looking for the relative equal highs here and the buy side liquidity that rests above that. And this down close candle right in here, it has a tail on it. Okay, so this tail to its low to its close. The close comes in at 1.28 and 20. So if you take that measurement, split it in half, and use the midpoint, extend it out in time, that was the level I called weeks ago. That would be my upside draw on liquidity. It's also reaching up into, which is the breaker. Okay, so we have high, low, higher high. So it clears the buy side liquidity in here and then broke down. We have already rebalanced this right here. So this SIBI, sell side imbalance, buy side inefficiency, all sell side delivery. We have now offered on the upside and rebalanced this area here. I still suspected it could potentially trade up a little bit deeper and just watch the middle of that wick right there. Okay, extend that out in time. So as a rough idea, I'll leave the math to you in terms of what the actual level is by splitting that little area up. But we'll say that. Okay, so I think it's going to go up there and touch that sometime this week. Personally, that's what I think. Now, if it hits that and really expands on the upside, your attention goes here. Okay, real clear, obvious, relative equal highs. Buy side liquidity is really sitting there. If we take this out, dollar's going way lower, and it's going to clear this on the British pound. So we'll probably see 136s should we get here. Okay, so I have a little annotation here so that way I didn't forget. Why didn't this area fill in? Now, if you go back and listen to the recordings I suggested last midweek review, I said go back and watch the last 2 or so April 2020 market reviews and the commentaries. I outline also, and when we were talking about the British pound, everyone sees this area here, okay, and they're thinking, okay, it's a liquidity void, or now they understand my BISI and they think that that's going to fill in too. I gave you a very specific idea. I said that if I were making the market, I would take it down just below this low here, eat into this range, but don't fill it in, because if it does that, this becomes a breakaway gap. It goes down into that little bit, comes back up inside the range, retracement, expansion, rebalance immediately here, and then expand on the upside running to the equal highs. So it's important to understand when you're in the mentorship here, I'm going to drop things when it's salient. So everyone sees this area here and they're going to think it's going to fill in. But why didn't it fill in? Because the dollar was more likely to break down lower, and the market structure is intact here. All of the liquidity was below this low, and right below this low here. By dropping down in there, that sets everybody into what? A bearish stance. They want to sell short British pound. That's exactly what you want to look for. Those instances when now, at the same time, we were bearish on dollar index. So if dollar index is bearish, we outline an idea that it's going to dip just below this candle's low here. You don't see that in books. That's not supply and demand. That's not Elliott wave. That's not harmonic. That's not anything but me, ICT. So this area here, I'm teaching you with real examples, not talking about on the left side of the chart and selling subscriptions. I'm telling you before it happened, why it happened now is because we were expecting that breakdown in the dollar index. So if the dollar is going to go down, all the other foreign currencies are allowed to elevate and go higher. Where are they going to reach for? Look for your premium array. So we have relative equal highs. Easy. I should go right to that right away. And above that, where do we look? The series of up-close candles. That's one bearish order block. But we also have this backdrop over here. Higher high than the previous highs. Find the low in the middle. There's your breaker. But if we have a wick down here or a tail, okay, then you have to split that in half because that's consequent encroachment in there as well. So you have premium arrays in the form of relative equal highs, SIBI, old low, consequent encroachment, bearish order block, and then if we go through, we have relative equal highs, rejection block, old high, and buy side liquidity resting above that. So each one has to be looked at on an individual basis. We just simply can't go in, and I see this a lot on YouTube, people that have been studying with me, and they want to go in there and want to call these huge extrapolated moves and say, okay, it's going to do this, it's going to do that. In fact, there was a couple people in my Twitter feed that claimed that they're in mentorship, and they said, it's obvious, it's going to go down here and fill this in. Well, again, this is why I said, don't arm wrestle me when I give you a commentary. I'm not trying to say, don't be willing to make your own decisions, but I'm saying, be mindful of the things I'm talking about because you're going to miss the lessons in it by trying to say, well, you called it this way and I was expecting it to do that, because I had just tossed somebody out of mentorship for being stupid and rude and disrespectful. But afterwards he sends me an email and says, I'm glad you kicked me out because I was always going against your calls and I was right and you're wrong. Okay, well, the record speaks for itself. I mean, I'm not perfect, but I'm really, really, really up there. So whatever, make any excuses you want. The point is you're here to learn. And if I'm giving you the ideas or things to stimulate your study around a specific idea in price action, mine that, look at it, tend to it, okay? Don't try to go in trying to find the next swing or next setup because you're missing the opportunity of learning versus just trying to say, okay, he said it's going to go up to here, so all I'm going to do is just buy. And that's all you're going to worry about is that trade. And you will not learn anything at all by doing that, except for you're going to be nervous because you're not going to understand what you're doing. You're going to get out too soon. You're going to miss the big move, or you're going to move your stop up too tight and get stopped out. And what are you learning by doing that? How to do everything wrong, which is what you're in here to avoid. You're in here not trading with live funds because you want to understand where your weaknesses lie internally. You need to correct them, but you can't correct them until you identify what they are. And secondly, you're not going to be able to trust the method because now you have introduced money. And any little drawdown, even the dealer spread, is going to feel like torture to you. And you're going to add an impossible task of overcoming that fear and worry versus if you just simply study the price action. Because if you get really good at this and it's boring to you because you can see what's going to happen, that's when you want to do it with live money. Not anytime sooner than that, okay? So drop down into an hourly chart for British pound and bring this on home. A beautiful upside delivery here. Here is the equal highs, that blue line here, that's the relative equal highs on the daily chart. We stabbed on through that, and this is the remaining midpoint of that consequent encroachment on that daily long-tailed candle. So it's the midpoint of that tail is what that level is there. And before I moved that level, it was shown that we traded up into that bearish breaker. It doesn't mean it's not going to just break, or it doesn't mean rather it's going to go up to that level and completely collapse. I still think that this is a viable level to reach up for and trade up into, especially expanding above that 127.50 level. So that would be interesting. So you guys watched a couple things in the YouTube channel videos where a lot of people, I got a lot of emails from people like, man, this is really good. You weren't really calling the trades per se, but the things you said about them ended up happening afterwards. And that was, I guess, a confirmation that I guess we know what we're doing around here, huh? But anyway, we have a consolidation here. Price starts down here, retracement. Here's your low risk buy, consolidation, run, rebalance. All of this in here is extrapolated to the upside. So it's buy side imbalance, sell side inefficiency, a BISI, BISI. Price comes down, does not completely close it in. Leave some of it there. That's what you want to see. Just like you see it here. Price comes down. Does it completely fill it in? No. We are not Chris Lurie's group. Okay? We're not Chris Lurie. We're not teaching Chris Lurie. We're not doing all that stuff. Okay? We want to see it get inside of that range. Okay? So if we have a buy side imbalance, it can just dip in just a little bit. It can go down to the midpoint. We really like that. But if it doesn't close it in and it starts to run higher, man, is that such a good idea to get in. Because it's showing you that it doesn't want to close it in. It doesn't want to close it in. It doesn't even want to come down in here and close up this area here. So how many times do you see this occurring in the chart? We have one full closure of this candle here, there. And then we have a fair value gap there that never gets filled. We have a fair value gap in here that just gets inside of our institutional order flow entry drill. How about that? You don't see that anywhere. Beautiful extrapolation on the upside of the buy side imbalance. Basically a fair value gap. Does it completely fill it in? No, there's still some down here. It doesn't fill it. So now go back in time. We have one that's left open here. We have a portion here, and it's already starting to run. Man, it's going to take off. It's going to run. And that's why I was saying keep your eyes on those equal highs and watch and see if it reaches. And you knew about the level on the consequent encroachment up here because of the previous couple weeks ago. Back in April, we were talking about that. And that still is a viable level to potentially trade up into. Now, what changes it? I don't like the fact that this whole price run here has had 1, 2, 3, and then we went above our equal highs. So this could potentially be terminus. Okay, so that's why I'm saying watch Monday's trading, because if we wouldn't have ran the equal highs as deep as we did here late in Friday, then I'd say, okay, Monday we're probably going to have some follow through on the upside. But because we had this run beyond the equal highs, we had it here, retraced, rebalanced, left a breakaway gap here, and boom, it's taken off. So that's the reason why I'm saying wait for Monday's trading to see how they trade. If you miss the move and it goes up to here, who cares? Okay, there's so many of these moves that happen all the time. You don't need this one to prove that you're going to be successful at this. But if we do collapse, we have this low, these lows extended out in time. So here's 3 points of contact here, here, and here. We always use like the middle one. Okay, it's like the second point. And it's also, look at all the sell side liquidity resting below there. So we could see 25.80s traded to. It's about 100 pips or so. I would like to see it trade here first. Gun to my head. The ideal scenario would be if it trades up here and breaks down and creates a fair value gap, I'd trade it short after it makes the fair value gap and trades back up into it. Maybe institutional order flow entry drill as a short, and then look for a one shot, one kill that would take us down into here. That's a scenario I would like to see going forward, but does it give it to me? I don't know. Okay. Do I want to buy it? If it came down and just spiked a little bit but didn't take out this low, we came down a little bit here, that would be, well, let's see. Where's our premium at? So here is, we're already in discount. So it could come down to 26.58, 26.55. That might be something. It depends upon time of day too, what it does. Trading down there, that could set up another leg higher. But we've already had 1, 2, 3, 4, 5, 6. So it's gonna, if it does it, it's gonna be a real sudden run, and then that's what you want to see it when it hits this level here. If it's doing it on a hard, fast, large range, they're typically the ones that will be reversed and rejected. So if it hits that and we come down, we could get a trade that takes us down into here. But it relies a lot on how we trade on Monday. And if it just runs right up there on Monday, then there's nothing to worry about. Just simply wait and see if we have a breakdown. And if it does and creates a fair value gap that we can sell into, then we could then look for this area here. But I'm trying not to be too encouraging in that regard, because essentially what I'm saying is I'm trying to pick the low on dollar, and I don't want to try to do that because there's so many things weighing on the U.S. economy. Even though there's a handful of stocks that are propping up the averages, that it to me isn't strong, because they're just behemoths, and all the money is being poured into those stocks, and not a broad range of different issues or companies. So there's a lot of companies that aren't making higher highs when, like Amazon and Apple are doing. All right. And that, my friends, will do it for this one. I will touch base with you on midweek review. Your videos will start looking slightly different. There will be manual watermarks that we're putting on that. It's in addition to what you see here at the InnerCircleTrader.com and in ICT Mentorship. I'm going to be doing things in the video. If you happen to notice them, do not talk about them on the forum. If you are found to be talking about or describing what you're finding in the video, I'm already warning you now. I'm doing that to whittle down the groups to the people that are actually sharing until this company gets back online, because they're understaffed. They're not able to help me. So I have to do things the old school way. And it takes a lot of time and a lot of work, but I'm willing to do it to remove these people, because we have too many good lessons coming in 2021, and I'm just simply not giving it to the cheap seat people or people out there trying to sell it for $15 a month for subscription. I'm not setting you up in business. I'm going to get you.